Well, thank you everybody for your taking the time today to hear our story. I know we're one of the few uranium companies that you're going to hear about from today. And I think it's one of the more interesting stories out there. Obviously, I'm a little bit biased, but we're emerging as a resourceful US focused uranium company. And we'll talk a little bit why. We do have some forward-looking statements. I think probably the number one thing I want you to take out of this presentation about what makes Homeland unique is on the left-hand side of the screen, you're seeing the total report resources for U.S. focused companies in the space. You can see we have, and they include mostly historical resources, particularly for the explorers developers. And we're one of the largest, if not the largest, resource holder of historical resources in the United States in two deposits. But our market cap per pound as of this morning, the lowest of anyone in our peer group. But that's because we're a brand new company. We just turned 6 months old the other day here, earlier this month, and people are still finding out about us. But real opportunity for investors to come in even today to see as we do the work that we're gonna talk about to re-rate this company to our peers, and that's a multi potential for multi X. Key things about us, we're US focused for many reasons. We were getting into this before all of the things in the US changed here at the beginning of the year because we could see some of these things, certainly not all of them coming. I've been in the uranium industry for 25 years. I've never seen global acceptance of nuclear power anywhere close to this in terms of excitement, whether it be your left of the political spectrum, right of the political spectrum, or in the middle. We have two significant, very closely spaced resources in the uranium space, open pitable, and with obvious operational synergies that will make us, if we are able to convert things over, and a significant player in the industry. We're well financed. We have an incredibly strong board team, and as I mentioned before, attractive valuation. We have just over 100 million shares outstanding, fully diluted, just under 145. Our market cap has been up and down, as every uranium stock has been in the last 2 weeks, up and down 10% every day, but we're around that $50 million market cap space. Insiders and some of the vendors that the share of the properties we have vended in here have just a little over 32% of the company. And our market cap per pound compared to our peers, 62 cents. And as I was mentioning, nuclear power, whether you like the carbon-free energy things, whether it's now become investable with what's happened in the United States, the World Bank lifting decades-long bans on funding, whether you're worried about energy security, and absolutely the new build are just taking off like crazy. And this net new versus, for years you'll hear about all the new reactors being built. But what was being built was being offset by what was being, put down as the end of their mine life or their the life of the producer is turning around now, and those are being resurrected. And so we're seeing a lot of new net build, major growth in the nuclear space. And, on top of all this, the sweetener is big tech going nuclear in the AI race. And as we can see what's happening in the US, this is huge. Who gets to be the leader in AI is important, and energy demand by these power centers are huge. There's a planned, for example, in California, a planned AI center that will draw more power than the city of Los Angeles. That's just mind-boggling. And there are 35 other plants or data centers planned for Colorado, for California alone. So this is a huge power draw. It's actually going to have an impact on consumers going forward as well. We're American focused, and the reason why, and even before the Trump came in, and we were working on putting this company together. It's because U.S. only produces 2% of its needs, and yes, we've seen U.S. Developers and old projects come back off the shelf and be restarted. You're kind of talking somewhere in the 5 to 7% of demand range. Half of the U.S. supply comes from Russia, Kazakhstan, Uzbekistan, and Niger, which is challenging. We're seeing Kazakhs pivoting away from the West, and actually, Kazatomprom might have hit peak uranium because they're already going international looking for new opportunities. We've seen the U.S. streamline the process of regulatory approvals through the nuclear industry, starting the first SMRs and looking to quadruple generating capacity. While I don't believe that 31 countries in the world are going to triple capacity and the U.S. double capacity by 2040 to 2050, even a 25% increase is going to create a tremendous supply imbalance. And that's sort of here. We've seen a chronic change in the view of the most conservative groups out there when it comes to uranium supply. Uh, and it's with the IAEA saying, "Oh, we actually have to invest money in here to go forward." There is no chance under any circumstances in the next 15 years that we're going to see supply and demand balanced out. There will be more demand than supply under any circumstances. And for investors, the biggest thing to watch is you watch the spot price go up, you watch the spot price go down, and it's very hairy because it's the only thing you can see. But the reality is, spot price is only a piece of the puzzle. The prices of conversion, UF6 enrichment, as utilities don't buy uranium and then work their way through the system to fuel pellets. They work their way from fuel pellets down the system to U308, and they procure in that order. And you can see that conversion enrichment prices, the services needed to turn yellowcake into fuel pellets, are still at all-time highs. And that tells you that the procurement cycle has just started. So while there's volatility in the spot price, especially because of groups like Spot Uranium Fund or the Spot Uranium Fund being in and out of the market on spot frequently, uranium long-term prices are still on their way up, and it's been as highest in the last 10 years at $84 a pound today. A little bit about Homeland. We're completely focused in Colorado, in the northern end of the Colorado Plateau, in a past producing district that was run by Union Carbide, where there was over 5 million pounds mined in the between 1950 and 1983. We have an excellent infrastructure. We're bound on both sides by major highways, and we have a complete road network that goes through our properties. And quite frankly, on one of them, we might have to move a major power line out of the way. This is the property position. It's 37,000 acres or 15,000 hectares in two main areas. Coyote Basin, which is our flagship project to the east, and we plan to start drilling that in November here in a couple of weeks' time. And our Crossbones and Red Wash properties to the west. Between the two properties, we tie up almost all of the favorable, and certainly all of the explorable stratigraphy in the district. We have two significant uranium deposits that combined together have almost 80 million pounds of historical resources in there. And they're both open pittable. And that creates, as we'll talk about, some interesting leverage going forward. Coyote Basin, almost 35 million, or it's over 35 million pounds of U308 at a 0.2% range in four mineralized horizons that was found by Western Mining back in 1979, right at the time that 3 Mile Island happened. And when 3 Mile Island happened, the entire US uranium industry went into the dumpster for about 25 years. And nothing was done on that property since Western Mining defined these resources. Four mineralized horizons, you can see them all there on the screen with 21 holes of 24 drilled actually intersecting uranium mineralization. And this is going to allow us, well, it can't be converted to 43-101. We're going to have to do some more work. What it does is provide us with a roadmap, which is we see here, where Western Mining showed their four different mineralized horizons and different pieces of them. And we have three different areas that we can focus on growing that resource. And our goal in this year's program, where we're going to drill about it's 50 to 70 holes to get us to a resource stage by the end of the first quarter, is to basically test these areas. We know it's open in the down dip direction. Everything here dips about 6 degrees, 4 to 6 degrees to the east. This mineralization comes to surface, and what you're seeing here only goes down to 250 feet vertical. So it's in the open pit range. Four mineralized horizons that are 1 to 40 feet thick that are all packaged in the 200-foot vertical thickness. It's going to be, if we can prove up what they've shown us, it's going to be interesting. And we also believe there's potential between the holes, and that's a whole discussion that will take 15 minutes that I won't bother you with today. So our goal this year, and our guys are out there in September. Here's the guy out in the field actually sampling the mineralized horizon as it pokes out of the ground. We did all the work in June to say, did what Western Mining found, was it real? Where they said their horizon was, is it there? Where they have hot rocks, were they hot? And the answer was yes. So our drill permit, we were actually expecting their drilling a week ago, but our drill contractor was delayed being able to come to site. But we got our permit, and we'll be drilling here in the first week of November. That first part one of the phase one program to define that roadmap of mineralization. We have a budget of over $5.5 million, or about $5.5 million, to get to that preliminary resource by the end of the first half. Our second project we acquired just a couple of weeks ago. We were aware of it because of our acquisition of the Coyote Basin project. Is what was used to be called Skull Creek. We've changed the name of it because there is a nearby Skull Creek deposit, which is many orders of magnitude smaller than what we've acquired. There's just a little over 44 million pounds here at 0.3%. Outcrops at surface, it dips at about 55 degrees. And what's interesting to me is that we can see from the data that we've acquired of drilled holes drilled once again in 1978 and 79, right at the time Three Mile Island happened, it was left idle, except for a small program done by Energy Metals and Blue Rock Resources in 2006, excuse me, that there's been very little work done on this because of the death of the industry and the post Three Mile Island. But the probe data suggests that the mineralization here is very wide, upwards of 50 plus meters or 50 plus feet thick. And we know it dips to the southeast. And I think what excites us is that we were preparing for our drill program here that we were expecting to start a couple of weeks ago. We ran across old drill core from this deposit that we'll be able to go back. We know where those holes are located. We didn't have any information for them. Now we know we can relog these holes and figure out and give us a leg up. We think we can move this project forward in parallel with Coyote Basin with very little work. But the plan will be compile the information, relog these holes, do some mapping and sampling here this fall before the snow flies, put in a permit application, and consider drilling in the spring, summer of next year. And by the end of 2026, both these projects should be in a resource stage. What these two projects give us is mineralization at surface that are close together and have obvious synergies when it comes to operations, whether it be exploration or mining. And we can look at it as low cost open pit potential operations. We're located between three conventional uranium mills. One of them is White Mesa. That's functional. The other two need to be upgraded to be able to today's standards. However, we're looking at these projects as a heap leach ion exchange recovery, which gives us control of these things. With two projects north of 30 million pounds each, if we can convert those resources to current standards, we'll be in a situation where we have two operations that have a 10-year plus year mine life in them, and that gives you the opportunity to bring in some cost advantages, obviously, because you can scale up or down appropriately, but also revenue advantages because you can talk to the utilities about longer contracts that a single 500,000, 2 million pound deposit that's ISR amenable can't achieve. So that's a very quick view of what we're doing in the space. I want you to remember, we have a significant amount of resources. They're in two deposits and not four, five, or six like our peer companies. It's a lot easier to do essentially one mining operation because they're right next door to each other and permit that and move it to production than it will be to move 3 or 4 projects or 5 projects in 3 different states to production. So we have a significant operational advantage over our peers. We have a significant potential resource advantage over our peers and a cost advantage being open pit amenable. But yet our market cap per pound is lagging our peers, and that's because we're new and we're just starting our work. So just a little bit about the company. As I mentioned before, I've been in the space. I've been in the mining space for over 30 years, but 25 in senior and junior mining companies. I used to be responsible for Cameco's exploration portfolio globally. Ran a company called UX for years. Joel Leonard, an exceptionally good CFO. Nancy Nomore is well known in the space, in the uranium space, with experience at Phoenix, with Denison, with us at UEX Corp and making discoveries at Christie Lake. She knows what she's doing. Our board, though, is what separates us. This is a board that we should not have in a company our size. Led by Eugene McBurney, who is a legend in the mining space in junior markets, and Mark Christensen, equally so. Andrew Tunks, not as well known maybe in the North American markets, but certainly well known in the Aussie markets, founded ACAP, who was one of the largest discoveries in the last cycle. Rob Chuchuk, well known of this time at Standard Security in Wolverton, and CEO of Lithium Bank. Brent Cook and Paul Matisic go without a whole lot of introduction. Brent being a founder of Exploration Insights and an extraordinary geologist in his own career. Paul Matisic being involved in public companies in the mining space since the last uranium cycle and sold a ton of them for a lot of money. This board, I was surprised, and the advisors were surprised they wanted to join us when we started up, but they like the story, they like the potential, and I was pretty impressed that they wanted to join us from day one. This should be $1 billion company board. And with that, let's go back over advantages. We're in the US, where basically, if you can build it, there will be a market for your uranium because there's an unsatisfied market there, even if the market doesn't grow. And if they're going to look at fourfold or even twofold increases, that's substantial. There's substantial demand there. Nuclear power, no matter where you are in the political spectrum, or whether you're believe in clean air, whether you don't, it's more about security. It's never been more accepted. We have a unique situation where we have two deposits that can be operated as one facility that are open pitable with low cost heap leach angle being considered. We're well financed to do the work that we have in front of us for the next year and a half. We have an incredibly good board and management team, and we're attractively valued compared to our peers, even today.
Even today. Right
And
on.
with that, Arlen, I'll turn it back to you for questions.
Yeah, well, we certainly have a couple here. When do we anticipate drills be turning on this?
We put out a news release that we said it would be in the round in and around November 1st.
Okay.
Basically, what happened is our driller got laid off of a job and needed to send their equipment back for general preventative maintenance before they could get it out to site. So
Yep.
we were expecting to be drilling by now, but
Yep.
that kind of threw a boomerang into our plans.
Yep. How much cash are you going to have once you finish this program and have your 43-101 numbers out?
We should be north of 5.5 million still in the bank.
Okay, so you got lots of dough.
Yeah.
And how long did it take you to get your permits once you made your application?
It took us approximately 3.5 months to get the notice of intent permit, and I think the last 2 to 3 weeks was just a little rubber stamp we needed from one person who was on holidays.
Okay.
So it didn't take very long. We found that the BLM in particular was extremely helpful and were helping us shepherd us through the process and guiding us, saying, "Hey, you should do it this way or that way, or make this decision or that decision."
Okay. I noticed that the crossbones looks like the historical numbers there had a quite a bit higher grade.
Hmm.
Is it the same type of systems or like they're all the same kind of stratigraphy, right?
Yes.
Can you talk about the geology there? What's different about the two?
So sure, I think the geology isn't so much different. They're in different layers of the stratigraphy. The crossbones is slightly lower, but the geology is very similar. It's sandstone uh, the layers that are sandwiched by impermeable shale layers and silt and lignitic layers. And what we're finding is that the chunks of this carbon button called carbon buttons are in the sandstone. They're like little pebbles that were in the sandstone, and they act like a Brita filter. Like you have a Brita filter that screens out all your bad things and your salts, your metals in your refrigerator. Same thing. The essentially it's little charcoal buttons, and they suck up the uranium as the uranium goes through it in the groundwater and creates what's called a tabular carbonaceous trash style deposit. And both are similar.
Okay.
Both deposits are similar that way.
Yeah. Um, when do you think you'll need to raise money again?
I think at the end of 2026, we'll be in a position where we want to raise money.
Yeah. Do you have any access to warrants in your cap structure right now?
We do. We have a little bit over 28 million warrants at 50 cents that are exercisable here
20. So
uh, for another year and a half,
okay, so that's 14 million dollars if you can get above 50 cents.
roughly. Yes.
Yeah, ish. Cool. Roger, excellent job. Thank you so much. That answers our questions today. Best of luck on your drilling program. And yeah, we'll talk to you later. Thanks so
All right. Well,
much.
thank you very much for your time and good best luck with the rest of the conference.